Trading felt impossible for me in the beginning because every time I thought I had figured out what the market was doing, it would switch on me. It would be trending and I'd enter into a trend trade and boom, the trend would switch on me. It would go sideways, turn into chop, and I'd get stopped out losing money. Or it would look like the cleanest breakout ever. I'd go long thinking it was about to explode and I was gonna make a ton of money, and instead it would fake out, trap me, everyone else, and reverse the other way. And for a long time, I thought that just meant I was unlucky. But the truth is, it's not bad luck. That's what happens when you're trading the market without understanding what state it is in. And more importantly, when the state is about to change. Because the market doesn't just move randomly. It rotates through the same 5 states over and over again. And if you can't identify which state you're in, you'll constantly be using the wrong strategy at the wrong time, or you won't even know when it's gonna change into another state. So in this video, I'm gonna break down the 5 market states I look for every single day. And I'm not just gonna tell you how to identify them after the fact, you already know what's going on. I'm gonna show you the signals that tell you when one state is ending and another one is starting. Because once you learn to spot that transition in real time, you're gonna stop getting trapped and entering trades at the worst possible moment, and you can start predicting and catching the exact move that most traders are completely missing. So first off, let's talk about the most basic one, a trend. A trend is when the market is moving in one direction. Quite often it's signaled by making higher highs and higher lows for an uptrend, and it's making lower lows and lower highs for a downtrend. Well, to show you, in an uptrend, often a healthy one has big moves up and shorter pullbacks. This is the healthy way a market moves up, where it still has time to make pullbacks before it continues higher. Quite often to trade these, what you can do is you can buy it when it comes to what you can eventually draw is a trend line. Or quite often, a healthy trend will come to a previous swing high, bottom there, and continue higher. It'll make this stair-stepping pattern as it moves higher. And so these are multiple ways to trade it, is either buying at the previous, when it bottoms at the previous swing high, or if you can identify a trend line, buy it when it hits the trend line. Sometimes in the best case scenario, this can line up at the same time. Here's a great example right here. We have a pretty clean downtrend, and then you have it making pullbacks into that downtrend. Now let's talk about how you know when a trend is gonna end and those signals that you need to know of so you avoid getting trapped and the trend ending. Well, first off, one is super simple, is it breaks this downtrend that you can draw. That is the number one easy way to do it. You know, you just draw off a couple swings here and it breaks it. Well, you can pretty much guarantee that it's going to change. Now, when a trend changes, it doesn't mean that it's going to immediately reverse to the upside. It could go 3 different directions. It could reverse to the upside, it could start going sideways, or it could continue down. It could either accelerate the downtrend, or it could just go in a smaller, more shallower downtrend. It just signals to you that it's changing. It doesn't signal to you exactly what it's gonna do. And that's with all of these examples. There are other signals that can help you predict what the next trend state will be. Now with this one, a good indicator that it was gonna start to go choppy and sideways was, well, one, it was near the market close. The market closed right here. And so going into the market close, you can assume it's probably gonna start chopping. And also, before it hit this downtrend, it just chopped into the trend line instead of having a normal move like it was having before. These two moves, it had a move, a pullback that was healthy, and then it bounced and continued lower. And then it had a pullback that was healthy. There was a couple choppy candles in here, but here it had a move down and then it just sat there. It didn't have a pullback. And for me, once something starts to just sit there for 5 to 20 candlesticks, that's a really good signal it's gonna start just chopping. you want to be aware of and looking at the moves of the market. What do the moves down look like, and what do the pullbacks look like? You can see these pullbacks start to get shallower and shallower, and then they almost become nothing. And so in a way, the market is starting to get tighter and tighter here, showing you that the volatility is decreasing. This is how you can really start to read into the markets and understand what is potentially happening and how the trend is changing. And so instead of coming here and betting and just blindly knowing that, okay, well, there's this downtrend here, it's here now, I want to bet that it's going to continue lower, you would see these other signals going on and say, hey, I actually think I should wait and sit out on this one because it seems like it's likely that it could just start to chop. And now zooming back here a little bit, this is how a choppy trend can happen. So here's a recent trading day we had where the market opened at 9:30 and it had a couple of good moves here. And overnight, it had massive volatility. And so you'd think when the market opened that there could continue massive volatility, but instead it starts to chop. And so how do you read that and predict that as it's starting and developing and showing you candlesticks over time? Well, one, choppy markets are identified for me with overlapping candlesticks. You start to see this here is much more of a trend. You can see, there's some candlesticks that are choppy and overlapping, but generally it's moving in a direction and it's having pullbacks versus here, it has a move down, but then it gives that whole move back up. Essentially, from the market open to this point, it didn't move anywhere. And then you have that happen again where it moves all the way down, hits this area and moves all the way back up. And so even on a smaller time frame, you can say, well, it's volatile back and forth and there's movement, but over the course of 30 to 60 minutes, the price hasn't actually gone anywhere. And so this is signaling that it's being choppy. And so even if you think that there's large movement potential, you have to understand and realize and notice this and say, well, it's being choppy. And so it's likely that it's the movement here you can see is it was hitting this support zone down here basically, and these highs were getting lower and lower. So it's going into this wedge pattern and it's likely to just start to sit there and be choppy. And so that is a state where I always avoid trading because it's super hard to try and predict when the market is going to come out of chop. Just like the same thing of trying to predict when an uptrend is going to end, it's really hard to predict when chop is going to change. Now, when it starts to get into a state like this where it is literally just not moving anywhere and it's like trying to watch paint dry, is what my go-to rule always is wait, just wait it out. Don't do anything. Don't be trying to predict when it's going to break out because again, you could be entering in here. You could be entering in on this big candlestick thinking that that's a signal that it's going to continue lower. And instead it just reverses that and reverses that and reverses that and sits there, right? And you just don't know how long that's going to go. It could go forever and it can just move up here, hit this high, and then, go back into a choppy state. And so what I always do, my rule of thumb with waiting for chop to change is just waiting for the volatility to come back. Wait for it to break out of, let's say, this support zone it had. It broke out here and reversed back in and has started to show some volatility. And even then, it kind of started, it still continued to sit there when that volatility broke. And so sometimes this is a day in the market, basically. This is the first few hours. The day eventually, after most of the day of chopping here, it went into that downtrend. But some choppy days, it's better to just realize it's choppy in the first hour and just move on with your day. It's not worth sitting there trying to predict something because it's like trying to make a shape out of clouds. You're gonna make something up that actually isn't there. And when you're doing that with trading, you're gonna lose money. Okay, let's go to the next state of a reversal state. How do you tell when a trend is actually going to reverse versus turn into chop or just continuing the uptrend? This is a huge factor when it comes to trading and trying to reversal trade because predicting when a trend is gonna reverse versus continue is massive. And so the biggest thing is it coming up to a previous support or resistance zone. So if you look at the market opened up here, actually there was news, this is a news spike, and then it opened up and tapped that news spike and kind of kissed it goodbye before selling off. Well, I would take a tool and say, hey, well, this is a nice resistance zone because the market's already fallen off of there twice. And so as the market, plays out, kind of it starts to trend up here and it reverses from the lows and trends up here. I would call this an unhealthy trend or a very fast, tight trend. And we can use our kind of trend indicators that we talked about of it kind of having this trend line that's very tight. And then as soon as it breaks that, also looking at the swings, right? The structure of this market. If you look at here, it makes a high here, makes a new swing low, it makes another attempt to continue higher here, and that fails. And so this puts in a lower high. This low right here is lower than this one. And so that's showing you weakness, because if the market was strong, this would pull back and continue higher in an uptrend. Even if it's broken this trend, it would continue, if it was strong enough, in a new type of trend. It might start to make something like this where you can draw a trend line. But instead, it hits here, bottoms, and then breaks this, making a new low. And that to me signals weakness in the market. And so coupling that with being at a area where the market's already reversed twice is a good signal that it's going to reverse versus going sideways or continuing an uptrend. And also, because this trend moved up so quickly, it didn't have healthier pullbacks like this. It wasn't a broad trend. It was a very tight trend. It's more likely to have kind of a bigger pullback. And so when this can just turn into chop and either continue higher or eventually reverse is if the trend is strong enough that it hits this area and starts to chop. Now, a lot of the times that will be signaled by more of a broader, healthier trend that has pullbacks. If it has a tighter move like this, a lot of the times it will have a pullback. Now, you can also have trends that are so strong that even when they hit this kind of area, they're not really gonna have a pullback and they're gonna continue higher. It just takes a second to break through this resistance zone. And how I identify those is if the trend has happened for a long time and it's a new day where the market already hasn't shown that it's reversing a lot. This day opened, went up once, reversed, went up again. And so because of that, it's already kind of been showing you that there's volatility, good for trading, but it's more likely to continue with that volatility of back and forth movement versus if I zoom out and trying to find an example here where this market, this is the previous day, the market opens up here, makes a massive move up. That's pretty unhealthy, but over time you can see it just continues higher and the trend is just super consistent and strong. And so even if you hit a resistance level up here, I would start to think, well, this trend is just strong enough that it's had time to pull back. And if it was going to pull back and give this move that it had up, well, it probably would have done it here. But because it had that time to consolidate and then it continued to move higher, it's more likely that it's going to continue higher and you should stay away. So now let's go into a breakout state. What makes the market likely to break out as it hits a resistance zone that it's already reversed off of multiple times? How do you tell that it's gonna break out versus hit this level and actually fail like that example we were just looking at? Now, one though is, what does the trend look like into that area? Is it a healthy, methodical trend that is showing a lot of strength and it's been continuing for a while and it's on a day that's not choppy? That makes it more likely to just continue higher. Now, as well, I wouldn't bet against the trend until that trend line is broken. So if the trend line is holding and it's continuously just making new highs into that resistance zone, it's likely to break out versus reverse at this zone. Another way to identify if something is breaking out and it's going to continue in that direction versus failing is we have this example of this day here. The market opens here at 9:30 and it's choppy, kind of like I was talking about earlier, you would not want to bet or look at the market to trade when it's doing this. But the market attempts to break out one direction here and then reverses and breaks out the other side of the overnight high, and then it pulls back as well. But you can see it pulls back to essentially this upper range that the market had. And because it's already broken out one side, a lot of the times I've noticed that if a market is in, let's say, a chop range and it breaks out one side and fails, and then it reverses and breaks out the other side, it's likely that that side is gonna continue to the upside because now it has strength behind it of faking out the other direction, which we'll talk about in a second. And so this then continues higher, and you can start to see here, it broke out here and then made a shallow pullback and then continued higher as the day went on. Now, this was the major move of the day, but it still kind of had an uptrend into the end of the day from there. Now, the final state is called a failed breakout. It's probably my favorite pattern, and I think it's the one that's most profitable as well. And here's a great example of it. And so what happens is, the market's in this choppy state we were talking about earlier. And so you can pretty much at that point say, okay, well, there's a pretty solid support zone right here. And so what happens is the market goes here and, it starts to increase in volatility and it makes a big push with all these big red candlesticks and breaks this zone. And so a lot of the times what breakout traders say is, well, they think, oh, well, it's broken out of this area. I'm gonna wait for a quick pullback here with this green candle and then bet that it's gonna continue lower because I think we're breaking out of this chop range and we're gonna start a downtrend. But you can more easily predict that a failed breakout is gonna happen versus a breakout because, again, look at the trend that made the breakout happen. It is coming from a choppy, volatile market. So this trend isn't healthy and it doesn't have pullbacks. And so it's likely that it's gonna fail because of that, because it doesn't have that much strength behind it. And so once it starts to consolidate here, that tells you that this momentum that came out of nowhere is drying up, and then it starts to make a bottom here. And this candlestick right here, if you kind of look at it, well, that candlestick basically opened up here, shot lower, and reversed. And so what's happening here is it's basically trending down, it makes a bottom, it moves up, and it makes one more bottom, and that's showing you essentially a double bottom. The market is attempting to break this low again, and it fails. And that failure is showing you that it's not strong enough to make a lower price. That's what that is showing you. And because of that, that is showing strength to the other side. And it makes it likely that this will reverse higher. And because this is an overextended, unhealthy move, it's likely to rip this whole move back before it slows down. And so it comes back basically to where that move started. And then from there, it goes back into its choppy state. And so trading failed breakouts like this is extremely powerful for finding traps and also catching big moves. Now, if you want to learn how I've used these states and turn them into a strategy with a 5-step simple entry checklist that I've taught thousands of traders to become consistently profitable using, check out this video right here. And as well, I've got a free candlestick patterns guide in the link in the description below that'll go even more in depth into price action, movements, and states.